Hey, welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to exit highly appreciated businesses, real estate, save a failed 1031 exchange so you can create and preserve more wealth. I'm your host, Brett Swarts, and each episode I'm joined by some of the best real estate, financial, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm also streaming on we're also streaming on Expert CRE Secrets as well. YouTube channel, you can check that out. I'm excited about our next guest. He's the founder and principal of Next Level Income. Since retiring after 18 years in the medical device industry, he decided it's time to helping others become financially independent through education and investment opportunities. And he's been investing in and managing real estate for over 20 years. And so much more. He's involved in over $1 billion of real estate acquisitions. Please welcome to the show with me, Chris Larson. Chris, how you doing?
Brett, I'm great. Always good to see you, my friend.
Absolutely. We last saw each other at, I think the Best Ever Real Estate Conference was the last one, or maybe it was the other one in Vegas, another real estate conference. But either way, it's always great to see you, Chris. I think you've been on the show once before. I've been on yours, which is great. We're going to dive right into the show topic, which is this: 6 figures of passive income. Six figures of passive income. But before we go there, Chris, give people a little bit more about your story and your focus.
Yeah. So, Brett, you mentioned a little bit about my prior life, if you will. I've always been a real estate investor. Bought my first property at 21 when I was still in college. I was day trading in the stock market, and during a sleepless night at around 3 a.m., I said, "There's got to be a better way. I'm 20 years old. Like, am I going to do this for 20 more years?" And when you learn about financial freedom, people think about the stock market. They learn about investing. That's not really financial freedom if you can't sleep well, right? So I read over 250 books, got an MBA in portfolio management, almost got a PhD in finance. And I decided that real estate was going to be my path towards financial independence. The following year, I bought my first property. That was over 3,000 doors ago. And since then, we've moved from just single family residential properties that I was managing myself into investing in multifamily properties, ultimately syndicating properties. And then we've also gotten into some small businesses, self-storage, and now Next Level Income is devoted to helping others create 6 figures of passive income themselves.
Amazing, Chris. And so let's dive right into the secret or the top secrets to building this 6 figures of passive income. So what is the number one secret to doing just that, Chris?
Yeah, so I think the first step is, and this is, people are going to be like, "Oh, I was hoping for something more shocking. Make more money." So in my book, which you can get a free copy at nextlevelincome.com, I talk about 3 steps, and this is as easy as teaching my 11, 13-year-old boys. Number 1, make more money. Find a high income career, profession, or business where you can become accredited. So I think the key is make $200,000 or more a year in income. That's going to allow you to have capital that you ultimately can invest, and more capital, more opportunities. That's ultimately going to lead you to more freedom.
Excellent. So rule number 1, or secret number 1, is to make more money, get $200,000 or more so you become an accredited investor. Chris Larson, what is the secret number 2 to having 6 figures of passive income?
Yeah, so this is something that, Brett, you and I have talked about a lot, having you on the show. Number 2 is going to be keep more of that income. So you hear the adage, it's not what you make, it's what you keep. And again, it is what you make, because you can't keep more than you make. Although there are some ways to do that if you've made money in the past or you get tax credits from the government. But in general, you can't keep more than you make. So you want to keep as much as possible. This means you need to have the proper entity structures in place. This means you have to have the proper tax strategies in place. And this means you have to have the proper legal structures in place, because there are 3 insidious things that can rob you of the money that you've made. Those are taxes. This is going to be probably your biggest expense. If I can say, hey, you can keep 50% or double what you're taking home from tax strategies, that's more than most investments are going to be able to give you. Number 2 is a major health crisis, and this could include death. My father passed away when I was 5 years old, which was a big motivator for me to now spend time with my children, my 2 boys, because I value how precious life is. So you have to have the right life insurance. You have to have the proper health insurance, proper disability insurance in place. And then the last one is lawsuits. Somebody can sue you, whether you have your own real estate, your own business. I worked with doctors and surgeons for a lot of my career, and unfortunately, I saw a lot of them. They were sued by patients, and sometimes they were sued just they were brought in a lawsuit that they had nothing to do with, never even saw the patient, but got sued because they were on call or something like that. So you have to have the right insurance. You have to have the proper legal structures. So if you have a property, it should be in the proper legal structure. So you need to consult with the right consultants and to make sure you have those things in place. Again, Brett, what you do with your company, it also helps in a big portion of that keep portion of the make, keep, and grow strategy.
Absolutely. That sounds great, Chris. So secret number 2 is keep more income. Secret number 1 is
That's
make
right.
more income. And when you're keeping more income, remember you had the proper tax, legal, and insurance, tax strategies, legal structures, and then proper insurance in place. That is secret number 2. Chris, what is secret number 3 to building 6 figures of passive income?
Yeah, so this is the fun part, right? So you've done the hard work, you're making a lot of money, you've got the right tax, right legal, and right insurance structures in place. So you're keeping as much of that money as possible. Now you can look to grow your money. This is the make, keep, and grow strategy. And you have to decide, do you want to be an active investor or a passive investor? I personally think if you're an active investor, you should be making significantly more than if you're a passive investor, because you're investing your time, you're investing your credit, you're investing your personal risk in those investments. Or do you want to be a full-time passive investor? Both of these are great options, and I personally think you should have a blend of the two. There's a lot of different investments out there, so you need to work with somebody that can help you decide what type of investments fit for you. Is it real estate? Is it multifamily real estate or self-storage? Or is it something that's more active, like short-term rentals, like car washes? We're a big investor in car washes, both here locally and smaller washers, as well as regionally. They're more of a business. So that's going to be something that can do that. You can buy businesses and invest in things like those. But you need to know the right questions to ask. You need to know how to analyze them. In our course, we have a spreadsheet. It helps you learn the proper questions to ask potential syndicators that you want to work with, helps you analyze these investments and ultimately quantify the returns that you're going to get and rank them and see, hey, are these the right investments for me? But take a step back before you dive into an investment. So if you're like, oh, great, I'm going to start investing in these different things, you need to determine, hey, what is your investment strategy? What is your investment thesis? What do you enjoy investing in? Where do you want to invest? Because where you invest, in my opinion, is as or more important in what you invest in, and ultimately who you invest with. If you're going to be investing in passive investments like syndications, like we do, you need to make sure that you trust those partners that you work with. So again, make more money, keep more of your money, and then grow your money by learning about active and passive investment options and partnering with those that can help you grow your portfolio.
Fantastic. And we'll do a little bonus here too. If you're an active
Yeah.
investor and you're in commercial real estate, multifamily in particular, you can do what's called cost segregation or bonus depreciation, which can offset your active income, which is pretty incredible to think about. Not only to be passive income, but active income if you're what's called a real estate professional. Now, typically your spouse needs to be that professional, right? So it's just check with your CPA, but it's a little bonus there that most people aren't necessarily aware of. But it's an amazing way for you to kind of blend a lot of these strategies that Chris is talking about to grow your wealth in a more significant way, keep more of those dollars versus paying tax. By the way, if you want to learn more about Chris, you can go to nextlevelincome.com. It's nextlevelincome.com. If you want to learn more about some capital gains tax strategies, you can go to capitalgainstaxsolutions.com. Chris, let's shift a little bit. You mentioned a little bit about buying a business. I'm curious, what would you say is your favorite or hottest business to buy right now?
Yeah. So again, we're to the car wash space. We are buying and acquiring, buying, building, and acquiring express tunnel washes. So these are basically active real estate. So I like real estate, and you just mentioned it, Brett. You talked about the depreciation. I like businesses that have cash flow, that are simple, that are predictable, but also have depreciation benefits. So if you have a business like a car wash that you can also depreciate, you can get the best of both worlds. You can have income coming in. You can also have those depreciation benefits. of the real estate that are coming in as well. And then one of the things I like about the car washes is you have this amplification effect. And what I mean is that as you acquire more of these businesses, as you acquire more of these locations, they become more valuable in aggregate. So you amplify the value of the business the more you have. And PE companies like these, they like monthly recurring revenue. So, whether it's a car wash or something else, a business that has monthly recurring revenue with members or renters, which, is one of the reasons we love real estate, that has depreciation benefits from real estate, and then has the ability to grow in scale in terms of value. Any business like that is something that I'm a big fan of for sure.
Fantastic. So make sure you are looking at something that's cash flow is simple and predictable and has the ability to be depreciated, right? To be able to offset a lot of that income. And then also this monthly recurring model. So like if you can buy express tunnel car washes, add value, improve those and increase the value and have recurring monthly revenue. That's the key. All right. Excellent. Chris, you have a book that came out. I think it's called, what's the book called? I mean, I don't want to forget.
It is. It's called Next Level Income. So, Brett, we actually have a couple resources. If you're listening here today, we give our book away if you go to our website, nextlevelincome.com. Also, if you want a step-by-step process to go through the make, keep, and grow strategy, complete with resources, that spreadsheet, we have a course on our website. Under resources, you click on there, you get a $500 coupon off of that course. So the book is free. The course is significantly discounted. And again, our goal is to help you achieve 6 levels of passive income. So we provide as many resources up there as well. We also have a podcast, which is great with guests like Brett that have been on there to help give you the resources to help you continue to grow both your income as well as your wealth.
Excellent. So let's dive in a little bit more to the current circumstances of the marketplace, right? With multifamily properties and or debt that's adjusting, right? And just kind of what's your temperature? What's your feel if we're in a opportunistic marketplace now? What inning are we in? If you had to say, if it's like a baseball game, right? And what's your take on making offers, getting deals under contract? What's kind of your feeling right now?
Yeah, so I have the view of the real estate market that's cyclical. So if we look back in time, you can go back to the 1850s where we started to record this in this country. And what we see is the real estate market typically goes through about an 18 to 19 year cycle. So it goes up, it comes down, it goes up, it comes down. And typically it goes up in 2 7-year cycles. We have a 4-year down cycle, and then it goes up again for another 2 7-year cycles. So if we measure this, we go back to 2012 was the last time we really hit the bottom of the cycle. And you move forward 7 years, end of 2019, we had the down cycle. People would say, well, Chris, that was COVID. But you can go back and we can have this conversation as long as you want, going back through time. I was talking about the end of 2019, being very wary of going into 2020. I didn't know what was going to happen. I didn't predict COVID, but when I saw it coming, I watched it very carefully. And one of the reasons is I was expecting a down year, like this mid-cycle slowdown in 2020. So if you go forward, 2020, 2027, we are looking at being right in the middle of that second 7-year growth period. And typically the biggest gains occur during this period. I would argue that a lot of the gains were kind of pushed forward into 2021. But I think that if you look at the demographics when it comes to real estate right now, we have more households being formed than ever before. We have millennials that are moving out of literally their parents' houses in a lot of cases. We have baby boomers that are retiring, unlocking equity in their homes and coming after these same pieces of real estate that millennials are coming after in terms of single family rentals. And then we also have baby boomers and millennials that are choosing to rent. So if you are in a good market, and I think this is very important, if you're in a growing market, so if you look across the country, rents are flat or down in a lot of areas. But if you're in a good market, like I was just talking about Nashville, Tennessee, they're up almost double digits year over year. That may surprise a lot of people. So if you're in a good market, if you have good fundamentals in that market and you have good debt, I think there's still some good opportunities out there. Now, all of that being said, I think it's a time to be cautious because prices are high. You have debt is high, so rates are high right now. And if you go into an opportunity that you're buying, you have to make sure that you're taking the right precautions. And there's 3 pretty simple rules that I think. 1, you want to buy a property that's cash flow positive. 2, you want to have common sense debt on that property, like say 70% or less in terms of loan to value. When you get into high loan to value, and you had floating rate debt, no interest rate cap, a lot of people have gotten into trouble here. So I think there's going to be some opportunities because of that. And number three, you want to have enough reserves in place so you can weather a storm. So if you're buying in a great area, if you're buying at a property that's cash flow positive, if you're putting solid debt on that property and you have reserves, I think there's still a lot of great opportunities out there. I think there's not as many as there may have been over the last 5 years, but I still think we have a nice window of opportunity. And also look forward, say, okay, after the next 3 years, there's probably going to be even more opportunities as people get into trouble. We have the presidential cycle that comes up here. And typically the second half of a presidential cycle, as we're coming into right now, you see a lot of money pumped into the system because that administration, they don't want to have the economy crash on their watch. So I think people were talking about a economic crash this year. I disagree with that. And I've been saying that for, the past year now. I think it's going to be another 12, 18 plus months before we have a real true slowdown. So be opportunistic, look at great markets, be smart when you're making acquisitions, and prepare for, the next 5 years. Start building your war chest right now.
Excellent. Hey, Chris, that's a great overview of the marketplace. And it's a well-balanced overview. So buy cash flow positive, common sense debt. Yeah. Make sure you're getting, rate caps, right? Have enough reserves in place, make sure you're not over leveraging, and look forward to what's happening here.
And look, hey, if you can't do those things, don't be afraid to wait, because there will be more opportunities in the future. So don't feel like the clock's going to run out on you here.
Yeah, that makes sense. So let's dive right into the other part of the show, which is capital gains tax. So one of the biggest challenges people have with 1031 exchanges going into deals, they run out of time. It can be challenging, right? Even exiting businesses, Chris, or other opportunities. But I'm curious, what's been your take? You've had a chance now to look at the Deferred Sales Trust a little bit more, right, as an alternative, right? So I'm curious, what is your overall take on something like the Deferred Sales Trust for people who want to exit deferred tax?
Yeah, look, I just mentioned this, right? If you're selling a business or you're selling a piece of real estate and you don't see an opportunity that makes sense for your investment strategy, I love the Deferred Sales Trust as an option for that, because you're not forced into buying something that doesn't make sense for you today. So I think what I just mentioned, it's a perfect strategy or a perfect tool to do that. I know people that are exiting businesses right now. So, I mean, we're talking, solid 8-figure exits, and they're trying to figure out, they're like, I'm going to get hit with this huge tax bill. And, this is one of the tools that I've referred them to, Brett, for that reason. Or they say, hey, I'm selling this business, but I would like to reinvest the proceeds in something like real estate. Or, like I just mentioned, maybe you want to sell real estate and invest in a business or something that's blended like that. And this is why I'm a big fan of it.
Yeah, and you can learn more about that by going to capitalgainstaxsolution.com and learn about the flexibilities. Also, have the new book that just came out, Building a Capital Gains Tax Exit Plan. It's
Which I have a copy of. Thank you.
Oh, look at that. Chris has a copy of it. Awesome. And I also have a copy of Chris's book as well. But so this book hit #1 bestseller. We're really proud of that. But it's not just me. I have actually a lot of really smart people in the book, like Kevin Harrington from Shark Tank. Maybe Chris is in the next book, and other really smart multifamily syndicators and operators. So check that out, Building a Capital Gains Tax Exit Plan. Go to Amazon or go to our website, capitalgainstaxsolutions.com. That being said, Chris, are you ready for the lightning round?
I was ready when we started, Brett.
All right, right on. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
I would find a coach or mentor faster.
A coach or a mentor faster?
Yes, absolutely.
Excellent. And what is the #1 book you've recommended the most in the past year?
So we were just chatting very briefly before the show here. Look, I think that, having financial independence is very important. It gives you a lot of opportunities. But for most people, if you don't have health, it doesn't really matter. So the book that I recommend a lot, and I've probably recommended more than anything else, is called Lifespan. And it talks about strategies to how to increase your health span and how aging is not an inevitability. So I was talking about, I just jumped out of the cold plunge here before the show, get me reinvigorated for the afternoon. And I'm a big fan of what David Sinclair talks about in Lifespan to help you increase your health span and be more energetic.
Fantastic. Next question for Chris. What are you most curious about right now?
Yeah. So again, I'm always exploring ways to improve my health, my energy, my productivity. I've been meditating for several years, so I'm very curious when it comes to some of the new not really drugs but substances that are out there that help you kind of rewire your brain. So there's a lot of research being done on psilocybin, different psychedelics right now. And I'm really interested to see like where that research goes. I'm not talking about getting high. I'm talking about actually using these to help people treat things like depression. I was in the medical device space, as you mentioned before. I spent 2 years of that in the pharmaceutical space, and I think that there's a lot of things out there in this world that aren't pharmaceuticals that could potentially help a lot of people, make them happier, make them healthier, and bring a lot of productivity and ultimately joy and happiness to this world.
Fascinating, Chris. Thank you so much for sharing that. I'm curious about that too, as well. Now that you got me thinking about that. Last question: after all your success, helping all the people you've helped, what's the number one way that you stay centered in your values and stay encouraged to charge for to reach new heights?
Yeah, so I'm very fortunate. I have two healthy boys, 11 and 13, and I always look at things through the lens of, would my boys be proud of me? So I always ask myself that question. If I'm making a business decision, if I'm making a decision, if I have to tell my boys about that decision, whether it's today or when they're adults, and ask, would they be proud of me for the decision I made? That really helps ground me. Also, I try to start my day with a gratefulness exercise. Just say, hey, what am I grateful for? Because look, if you're listening to this show right now, if you're listening to Brett and I have this conversation, you have a lot to be grateful for. You live probably in America. You have a lot of opportunities a lot of people don't have. You're most certainly in the top 1% of the world. And if you make $40,000 or more a year, you're in the 1% of earners in the world. We have a lot to be grateful for in this country. And I think if you're grateful, it's really hard to be upset. It's really hard to be angry. And you can probably do more and be a better person in your life if you follow that exercise as well.
Amazing. Chris Larson, I want to thank you for being on the show. I want to thank you for sharing your wisdom with us and your encouragement today. And for our listeners who want to get in touch with you, we remind them one last time, what's the best place for them to find you?
Absolutely. Yeah. Check out nextlevelincome.com. Get a free copy of our book. Subscribe to our podcast. Check out our course there. You can hear great guests on our show like Brett, who you've heard a lot of today. You can hear more about ways that you can make, keep, and ultimately grow your money and help you achieve financial independence as well.
Thank you, Chris. And also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they really struggle with clarifying their capital gains tax deferral options and or having someone like a Chris Larson to simplify their wealth plan, especially into commercial real estate and take action. And so I want to encourage you to connect with Chris as well. If we can help you save a failed 1031 exchange and or get out of all that frustration when it comes to a 1031 exchange, we want you to go to capitalgainstaxsolutions.com, where you can start to build your capital gains tax exit plan so you can have that freedom and flexibility to get cash flow and tax flow and the ability to build wealth on your terms at your timing. So go to capitalgainstaxsolutions.com or check out the book on Amazon, Building a Capital Gains Tax Exit Plan. Thanks, everybody. We promise to do better next time. We so